Right. Good morning, Zach Howard. It's a beautiful Thursday. June 25th is 26th. Yeah. And here I am coming at you from this beautiful setting. Don't have any fancy charts or data to share on the screen today, but just thoughts on a notebook of where we're to now in markets at all-time highs. Just a few days ago, all the clickbait, legacy media, and everybody was a doomer. It's the end of the world because we're going to have another war. And here markets are all-time highs. Why are we at all-time highs? We have a volatility on the VIX at 16. I want you to think of volatility as like the auger of a sailboat. The sailboat auger is a direction, okay? And then you look at the sails of that sailboat, that are flows. The sails up, the jib sails up, flows coming in, you get speed then going, okay? Volatility drives the sails, drives the flows. A regime of a 16 on the VIX brings money into the market that was on the sidelines. It is systematically machine-based trading, okay? You get these beta trades, the highest beta trades in the market are doing the best because that's where the money is flowing. Microsoft, $3.66 trillion of fiat market cap. Nvidia, 3.76 trillion of fiat market cap. Two companies alone. Then we about moving the market to all-time highs. Those two companies represent where the world is going, the technology world. That is why these old school Keynesian like macro data points are not as relevant. They are not like, oh my God, the Q1 GDP just came in negative 0.5% versus 2.4% previous. That is not really moving markets like it used to in the past. Jobless claims, all this type of thing. We are being driven by the machines, whether that is the actual trading or how the world is evolving. And that's why the real measure of what's happening is in the inequality. It's not in continuous jobless claims. People are doing independent work, whether it's Uber, Airbnb, like Google hosting a YouTube channel. That is what the world is. You look at that book, The Sovereign Individual, back 26, 27 years ago, written. That's not forecasting what we'll see play out in markets. Okay, so that is what's happening. That's why trades like Bitcoin, the derivative companies of Bitcoin, AI, robotics, that is where it's going. Back to the macro of old school Keynesian looking lens, the DXY, the dollar index, down to our line six level. That is also telling us, though, in real time, the debasement of the currencies is going to further increase the wealth inequality as you're seeing through a higher stock market price. And because the people that have stocks and have assets, they will continue to live a pretty good life compared to the people that doesn't get it and just trying to survive day by day. Blue collar workers are not adapting. That is where the real struggle is going to come. That's where there's opportunity, but there's also going to be challenges. And that's where I see the world is today in 2025 and going forward. Have a great day, and we'll probably be back with you next week.